Hey there, folks. Happy Friday to you. Hope you had a fantastic week trading. Bit of a choppy week in the markets. And last week I had indicated that I thought bulls could maintain control and take this market higher if they really wanted to. Apparently, they really didn't want to because we didn't do anything really all week. I mean, we're down a little bit for the week in the indexes. First time that's happened, I think, in the last 3 weeks or so. But it wasn't a big significant sell-off. There were a couple of look, we had the jobs number today. We've got this hurricane going on. We had a little sterling issue overseas overnight. A lot of different things happening. We've got this presidential election. We got another debate coming up on Sunday. And I think earnings season could be, earnings could be the defining moment for the markets as to which way we actually break. We got a warning from Honeywell, which is a little uncharacteristic. Industrials got hit a little bit today, but that also has, is a reflection on the strong dollar, which was the big winner this week. And let's just go ahead and start there, and then we'll head out and take a look at some other action that took place this week. But dollar had a nice little pop. So, we were bumping up into resistance of this trend line. Yesterday, I told my pro members over at Alpha Wolf Trading that it wouldn't be a big shock if we saw a little bit of a pullback in the dollar since we were completely out of the upper Bollinger Band after a 4-day run. And we did get a little bit of a pullback. We saw that this morning off of the week jobs report, but it really didn't get a lot of follow through, right? We had a little bit of an uptick in unemployment, so kind of getting some mixed signals out there. But then this week we did get some good ISM numbers and some other economic data that came in fairly strong. So getting some mixed signals. Worry about whether or not the Fed is going to raise the rate in November, which I don't see happening, or potentially in December. So financials have been kind of holding up real well. We had some rumors flying around about Deutsche Bank today. We had rumors coming out, or some chatter coming out about Russia throwing some cold water on the OPEC deal in November. So all kinds of interesting stuff going on. But I think really the thing that is going to decide or determine which way we head next is going to be most likely earnings and possibly the election, right? So let's see what's going on. So we had the pop in the dollar. We got a little bit of a pullback today. We'll see if that weakness continues next week. If that does, then I think you see a continuation or a bounce in oil, or not oil, gold and the gold miner. So let's take a look at the big loser for the week. That was gold, right? Completely out of the lower Bollinger Band. Told the members over at Alpha Wolf Trading that gold could be a good setup for a potential snapback play, right? Gold, JNUG, Nugget, GDX, GDXJ, they were all clearly out of the lower Bollinger Band. We did get a little bit of a bounce today. Wasn't as intense as I thought it would be since we were basically, straight down 4 days, 5 days in a row in these things. So if the dollar does continue to weaken next week, then I think you could see a stronger snapback, maybe even come back up and test this short-term trend line here and still maintain a downward trend in GDX, GDXJ, and gold. But we'll see what happens next week. JNUG got a little bit of a bounce today. Pretty good volume, though. Nugget, let's take a look at that real quick. A little bit of a bounce, pretty good volume. So there was some call activity in gold and some of the gold ETFs yesterday, late day. We'll see what happens. We'll see if we get any kind of a snapback bounce in those. All right. So look, and then if these don't, by chance, if the dollar continues to keep screaming higher and gold it takes another leg down, well, then keep an eye on dust, which was completely out of the upper Bollinger Band, and J dust. Right? Let's take a look at J dust real quick, and that also was completely out of the upper Bollinger Band. So we'll see. This wound up actually closing at what, 35? So tried to recover late day, it looks like. Okay, so that's where I'm at with the dollar and gold and the triple levered ETFs. Let's take a look at another disappointing sector, which was the IBB. Did manage to hold on to the 100 EMA today. Yesterday we came down and kissed it. Today we broke below, came down and tested this, well, 281, which was we had identified as a potential band of resistance here between 281 and 277 right in that range. Basically came down, kissed 281, and bounced back up, closed above the 100 EMA, but not looking really good for the IBB. Probably an area that you need to be extremely cautious of, at least in the near term. If we break below 278 or so in that range, it looks like the next level of potential price support could be somewhere around 270, 250, 273, right in that area. If we break below there, well, then it starts to get a little sketchy. Maybe we come down and test all the way down to 263.13 in that range. But I would be cautious in the biotech space. It seems like we're getting some negative negative action or negative results from some of these guys that are reporting this data. So I think today was Clovis was a little disappointing. So be cautious with the IBB. Let's take a look at the IWM. So there was some interesting put buying in earlier in the week in IWM. Closed nearly at the low of the day, came down and kissed the 50 EMA, bounced up off of it a little bit. But if we break down below this 122, then I think we come down and maybe test 119 in this area. We test 119. We're also testing this trend line, and if we lose that, then I think we come down and potentially test 115. So still consolidate. I mean, not anything to get panicked about, but if we lose that 50 EMA, lose 122, I think that also is a problem for the IWM. Let's take a look at transportation. Pull back today, so not a big shocker. I mean, you would think that this would be happening. We had higher oil prices, right? We have higher oil prices, and then we also have this hurricane that is happening, and just a boatload of flights that have been canceled because of the hurricane. So not a total surprise that we would be seeing a little bit of a pullback, which is interesting. It's a shame because we were coming up into an area of potential price resistance. If we could have taken out 147 or so with conviction, maybe take out 150, it would have been a nice little breakout for airlines. And we're just taking a little breather here. We'll see if 144 can hold as support. If not 144, then maybe down to 143. See if it acts, or actually 142.75 or so. See if that acts as support. But some weakness today. Let's see what else we've got going on. All right, so let's take a look at oil, which had a really nice move this week. We'll take a look at the USO. Right, was piercing the upper Bollinger Band. Had 1, 2, 3, 4, 5, 7 days up in a row, pulling back. Completely expected that type of action today. I mentioned it to the pro members over at Alpha Wolf, and needed to take a breather. So we'll see what happens next week. see if we get any more chatter about these production cuts by OPEC. I think there's supposed to be some. I think there was another meeting that was announced in October or something. So that could be. Could start hearing some rumblings about that. So let's take a look at XLE. Right, we're coming up into resistance at 171. Price resistance, potential price resistance, 171, and pull back just a little bit, but not a drastic pull. I mean, this is actually kind of a nice looking flag that is being formed right here. So we'll see if we just consolidate a little bit more, build up some energy before we take out that $71, $72 area. Let's take a look at XOP. Same thing, oil and gas exploration pulling back a little bit, sitting right on top of the 8 EMA. Retail actually broke over this trend line here. It's been flirting with the 50 EMA. Got a little pop today, and then pulled back. But in a consolidation mode, we'll see what happens next week. If we can take out 44.50 or so with conviction. I personally don't even trade retail. I hate trading retail, but worth keeping an eye on the sector. Metals and mining. So as expected, we had a little bit of a bounce in gold today. Saw a little bit of a bounce in the metals and mining. If we get a continuation, XME could come back up and test in this 26.50 area. Consumer discretionary almost broke back over into this channel, closed this gap on the daily, consolidated, looking to get back into that channel, pierced it today, and then wound up closing down here towards the low of the day. So, but look, still consolidating. Unless it breaks back down below 79 with real conviction, then this has a chance to get back up in that channel where it was trading for quite a while, between 80 and 82. Healthcare looks terrible. It's been one of the weakest sectors, and look, we do have a debate coming out on Sunday that depending on what is said, could wind up putting more pressure on the healthcare sector. But it's been in a downtrend for a while, and it's holding on to this longer term trend line here, but it's really not looking too good. I mean, it's looking like it wants to break below it. We'll see next week if this can hold as support, or if it finally gives it up and comes down and tests down in this 200-day moving average. Let's see what the utilities did today. Boy, this has been a hell of a waterfall for utilities, right? And I guess that's because of the fear of interest rate hikes. But what a waterfall in utilities. Actually kind of at an area, I mean, it sliced right through the 200-day. Potential price support around 46.50. If it doesn't hold there, likely going to come down and test 45. Might have some price support there, but utilities not looking real attractive, I'll tell you that. All right, let's take a look at industrials, which got a little bit of, got pounded a little bit today. The strong dollar certainly does not help the big multinational industrial corporations. And Honeywell, their guide didn't help either. So came down, tested the 100 EMA, bounced off of it. But I would suggest this sector is looking fairly weak, and probably want to be a bit cautious in the industrial space. Financials, when it was looking like we were going to get a almost for sure rate increase, financials got a little pop, and then we had some news about Deutsche Bank, that gave us a little pop. Let's see what happens next week. It did break this short-term trend line. It's at an area of price resistance here, potential price resistance. And let's see what happens next week. Look, I mean, the thing that I've been telling the people at the pro traders at Alpha Wolf Trading, keep an eye on FAS, FAS, right? If the financials really start to pop, and you don't want to play an individual name, keep an eye on FAS. Can get some nice action if the banks really do take off. And if the banks roll over, FAZ, right? Keep an eye on that one. But you can see, I mean, it has the ability to make some pretty nice moves. So keep an eye on those ETFs. Let's take a look at SMH, which surprisingly strong. I mean, this has been the strongest of all the sectors. It's really kind of been leading the way. Closed nearly at the high again today. Pretty impressive. Flirting, you know, it's consolidating before it tests that $70 mark. You know, KLA 10 core, and I can't remember who they were merged, called off the merger. I thought that would put some pressure on the semis. It didn't. Actually, KLA went up. So that the semis continue to be very impressive. It's, you know, holding the 8 EMA, consolidating now before trying to take out, you know, all-time highs, take out the $70 holla. So I still like the semiconductor space, but, you know, look, I've said it before, I'll say it again. If the markets roll over, it will take SMH with it, right? I mean, eventually it will bring all the sectors along for the ride. S&P 500, you know, really just kind of bouncing between 214. So actually, let me go to the SPY. All right, so let's look. It's really been bouncing between 214 and 216. 214, 216, 217, whatever. It's consolidating, right? Looking for a direction. I have said to the pro members that I'm not going to get real concerned about the S&P 500 or the markets unless we take out 212. If we take out 212 with conviction, which there's support, was resistance, was resistance, was resistance, was resistance. If we take this out, then I get concerned. Then I say, okay, maybe the bears have taken control. And that doesn't mean that you automatically just go running out and start shorting everything, all right? Because when anybody that's tried to do that in this market over the last year, probably over the last 2 years, has felt some real pain, because probably over the last 7 years. What am I talking about? It's a very tough market to short. So, you know, on the first day that we break below 212, I'm not going to suggest that you go out and short everything, but you could maybe start to break out the bear hat and see if there's any conviction to the market rolling over and sustaining that. So, all right, let's take a look at, we did get a little bit of a bounce today in UVXY, but then it wound up pulling back. Looked like it was, you know, look, took out this little trend line here, came right up into the 8 EMA, found resistance there, and pulled back. So, but that doesn't mean that, you know, if we really do see some weakness next week, that we can't get a nice pop in volatility, right? So right now there's a tremendous amount of complacency out there, not a lot of fear, not a lot of conviction, I think really is what it comes down to. You know, bears just don't have a lot of conviction. Bulls don't have a lot of conviction. And that's why we have these choppy markets. So TVIX, take a look at that one real quick. Same thing, popped right up into the 8 EMA and then boom, pulled right back. All right, so what else do we have going on? Home builders, take a look at home builders real quick. So it was interesting yesterday. It had a bounce, and I was really kind of trying to figure out why that was. I've been telling the members over at Alpha Wolf Trading that the pro members, that home builders just did not look good to me. It looked like it had a bear flag going on the daily, coming up into what I would think would be their soft season. You're coming up into the winter months, coming up into the holidays. I don't think you're selling a lot of new homes during the holidays. And I just don't think that's really a great time of year coming up into a potential interest rate hike. I get that. Maybe people, that gets people to get off their butts and go buy a house if they've been considering it before an interest rate hike. I suppose that could be one thing to look at. But today, so yesterday we had this bounce. I found it interesting, and I thought, well, maybe that could be because of the hurricane, right, and all the estimated damage that was going to happen to these homes. Um, maybe that was the catalyst for yesterday, and today it looks like it had a pretty good reversal, closed right at the low of the day, and if I'm not mistaken here, right on top of the 200-day moving average. So not a real nice looking candle there. If it loses the 200-day, I think you see more pain in the home builders. So I would be careful in that realm. Aerospace defense has not looked good. It just has not looked good. There was a analyst that came out, upgraded a bunch of aerospace and defense contractors yesterday. Lockheed Martin, Northrop Grumman, Raytheon, LVLT, I think, Triple L, or several of them were upgraded yesterday, and that really didn't seem to do a whole heck of a lot for the sector, right? And the sector is really trying to hold on to this 100 EMA. We'll see if it can continue to do that. But boy, there are a couple of names in this space that I have been watching really closely, and I still don't see a reason to get involved. It looks like there's still some weakness ahead, and that could also be because of the strong dollar. I don't think that is helpful to these big defense companies. So something to keep in mind there. Let's see. There was so materials. I did think that this sector materials, building materials, could get a pop off. Maybe it's because the hurricane got downgraded to a category 3. Maybe that's what it is. But I thought the building materials sector could do well. I was a little bit surprised that Home Depot and Lowe's didn't really get a pop off of the hurricane. SWK, Stanley Black and Decker, I thought could be an interesting play. Been consolidating up here near all-time highs at 125. They sell generators. They own DeWalt. So I thought maybe that could be something that would get a little bit of action off of the hurricane, and it really didn't. Pulled back even a little bit today, and the building materials pulled back. So I guess we'll have to see how this hurricane stuff plays out over the weekend, how much damage it does, and maybe some things change there in those sectors. I think it's worth keeping an eye on them, but not a very good looking setup on the daily for this XLB, for this materials. I mean, if it breaks below 4650, likely the next stop could be down here around the 200-day moving average. So all in all, bottom line is, one other thing. I'll hit one other thing. I got time. Solar sector, had one of the most bearish analysts on the street come around and get positive on the space. Was a sector that I think it's a sector that you can kind of keep an eye on, just because of the fact that higher oil prices. If we can maintain these higher oil prices, or even climb higher, then I think some of these alternative energy names can become somewhat attractive. There's a lot of them that have been really beaten up in the space. It is flirting with the 50 EMA. It has finally kind of worked its way. I don't want to say it's breaking this trend line. I mean, it had this. You got a potential double bottom here. Let's just say that. How about that? You got a potential double bottom, right? So maybe the solar sector is seeing its worst. I don't know. We'll see. It's another pretty challenging sector at times to trade, but worth keeping an eye on. All right, I'm gonna go ahead and I'm just scanning through this list real quick to see if there's anything else that really stands out to me. And I don't think there is. Let's take a look at shippers real quick. Came up into a potential price resistance, pulling back a little bit. Doing a little bit of consolidating. So nothing really there. I mean, look, let's see what happens after Sunday. Let's see who the winner is Sunday night. If it's another, Hillary win, then maybe the market will be super happy. If it's a Trump win, maybe the market will be scared to death. I don't know. We'll see. And then let's see what happens with earnings next week. Let's see what Alcoa does, which kicks off on Tuesday. It's not a big week for earnings. It's just the beginning of it. Alcoa just did that 1-for-3 reverse split. Had an interesting look on the daily. It still kind of does, actually. But we'll see what Alcoa's earnings are like. They just reported that they're splitting up the company or something to that effect. They're finally going to split up those divisions. Pearson upper Bollinger Band up several days in a row, so I wouldn't chase Alcoa. Matter of fact, I think Alcoa has a history. Even if they report good earnings, I think it pops and flops. It usually has a little bit of a run up into earnings, reports earnings, and the earnings seem to be good, but then the stock sells off. So don't go chasing Alcoa on earnings, but there are other aluminum plays that look pretty good too, that you could potentially play off of a good Alcoa earnings. But you know what? If you want that, you're going to have to come over to Alpha Wolf Trading and hang out in the chat room, and maybe I'll throw out those names in the chat room. All right, listen. Big weekend. Got Traders for a Cause in town here in Vegas. So I have a pretty hectic schedule this weekend. I am not going to say that I will not be doing a stocks to watch ticker TV this weekend because I haven't decided yet. It really depends on if I hurt myself on Saturday night or if I, if I take it easy, then I might go ahead and still do the ticker TV. I'll let people know on Saturday or Sunday morning whether or not I'm going to do ticker TV live for stocks to watch for next week. If I don't do it, then I will be back and do it next weekend for sure. So bottom line is that we are undecided. 212 for the SPY. Careful in the IBB. Let's see what happens with the dollar. Let's pay attention to gold and see what happens with oil. All kinds of good stuff going on. Be careful out there, and good luck trading next week. Enjoy the rest of your weekend. Be safe if you are on the East Coast. Be safe. Try to have fun. I know that would probably be very difficult over there, but try. All right. I will see you all next week.